Welcome back to Understanding VC. I'm your host Rahul. Today, my guest is Mikhail Taver. Mikhail is a founder and managing partner of Delaware based Taver Capital, an international venture capital fund focused on investing in global artificial intelligence companies. Prior to that, in 20 years of top executive roles with major financial groups and industrial companies, he has closed over 250 M&A and private equity deals. Now, let's talk to him. Hi, Mikhail. Thank you so much for joining me today.
Hi, Rahul. Thanks for having me.
Yeah, so we were just speaking a few minutes before we started recording this. You grew up in Mirni, which seems like a very faraway place for me.
Depends on where you're located, but yeah, it is. It is a generally faraway place. It's
Yeah.
on the very north or northeast of Russia, or what used to be Soviet Union. That's the capital of Soviet Union's diamond industry. You might have heard of or read about a place with a huge hole in the ground that can be seen from up there from space.
Yeah.
This is the place. That's Mirny.
Yeah.
Other than that, very cold. You got those polar nights, so sometimes you get light during the night. Not that much to do, to be honest, which probably prompted me towards reading and studying and so on and so forth.
Yeah. How did your family end up there?
Well, it is an artificial town. I mean, the diamonds were found there in the 1950s, I believe.
Yeah.
So they just, said, okay, we're going to start building it here. And people started coming over from all over the Soviet Union because the North pay was higher because you get a premium for working in these kind of conditions. So I don't know, just this is how my parents ended up there. This is how most of everyone in the city or in the town ended up there. I mean, the interesting feature was that even the sort of lowest, I don't know, demanding professions like, I don't know, a plumber or something, even those people had proper university degrees. I mean, all the people who came over to the north to earn money were quite well versed in pretty much everything, which is where it wasn't quite an academic town, but
Yeah.
close to that.
Yeah. So probably you didn't have much things to do other than, like you said, reading.
Yeah. I mean, I used to have this wall in my child's room. It was all just shelves of books, and it was when there's -50 outside and dark at 3 o'clock in the afternoon. There's not much you can do. So yeah, you just pick up a book and start reading. This is how. I mean, it wasn't just the sort of children's literature or my books. It was just all the family books that were just stored there in my room. So I just read everything without any particular sort of preference or order. I was just consuming stuff like, I don't know, like a chat GPT learning, if you will.
Yeah.
And along those books was the trilogy by Theodore Dreiser, the American writer. He wrote, so I now understand that this is not something, this is not about a book about finance or financial markets. This is just a background or, I don't know, some additional features to give more depth to the character. But I read it as that. I think I understood about 10% of that, to be honest, if not less.
Yeah.
But there were those, financial markets, securities, people going and, changing their lives for something that is yet to be understood. And this got me excited, and I kind of started digging in this direction from the very, I don't know, I was 6 or 7 years old then. So you could call me a career investor, if you will, because I started at that and gradually trained my way all the way to what I'm doing now without sort of deviating from that path. I had my first computer back in 1992, I think, and that was a fantastic addition to my books collection because I finished them all by then. and now I had something else to play with. So again, I believe this influenced my future life a lot. Since I am an investor and I invest in technology, chances are it has something to do with my childhood, with books and computer.
Yeah. How old were you when you first made your investment? And any sort of.
Well, I mean, I'm not the kind of guy who's got loads of exciting stories when he started trading at 10 and made his first million by 12. No, I don't think I did any of that. I've tried buying and selling shares just to try what it's like. But proper investments, no, I did them after I became a professional and I knew exactly what I'm doing. So sorry, no excitement there.
Yeah. So the last time we spoke, you mentioned that recently you've been also interested in psychology. That I thought was very interesting. How does understanding or studying psychology helps you as an investor?
Well, I mean, gradually, as you sort of progress in your career and you do more and more deals on a higher and higher levels, abstraction levels, if you will, you realize that finance, maths, investment, these are all very necessary things to know and have in your backpack. But equally important, if not more important, is psychology, especially when you deal with earlier stage companies like my fund does, because well, frankly, there's nothing else but that. There's just people. Two burning eyes, a PowerPoint presentation, maybe something to touch. I prefer these kind of deals. I mean, I'm not a pre-seed guy. I would prefer to have some proof of concept, touchable, actable, something to play with. But other than that, yeah, there's a lot of psychology in it. In addition to, I was studying for my CFA exams, 10, some time ago, a long time ago, and I was very glad and surprised to stumble upon the whole body of knowledge related to psychological traits. I mean, all this Kahneman and Tversky stuff about the things that we trick ourselves into and how to counter them, when you analyze your own thinking and do a bit of reflexation, if you will. So yeah, it helps a lot. It helps a lot to understand the people you're dealing with, the company that they are proposing to build. Plus, it helps you to control yourself, to know and notice the inevitable mistakes that you are going to make. But if you know and you control for that, it's a bit easier to navigate things. At least I hope so. At least I think so.
Yeah. Is there a particular book that you would recommend on psychology?
Mm, no, I mean there's a whole body of books, and it depends on what exactly you want to solve and how deep you want to go into that.
Yeah.
But I mean, at the very least level, that I don't know, just watch the TV series named Doctor House or House MD, I think,
Yeah. Yeah.
and
Yeah.
just remember one quote from there: "Everybody lies." That's it. That's enough psychology to start. Then you dig deeper and you discover more and more things.
Cool. Yeah. So you were in merger and acquisition, private equity for a long time before you became a venture capitalist.
Yeah,
Why become a venture capitalist? It's a lot more difficult and a lot more art than science, in my opinion, at least. So yeah, why
th-
become a VC?
that's what makes it exciting, right? And I mean, well, I don't know. I've been in private equity. I've been in sort of large scale company boardrooms, and then at some point I decided that it's time. It's a bit imprudent to say that I've learned everything, but I said to myself I've learned enough, and there's a lot more to learn elsewhere. So I started to sort of analyze and look at the ecosystem, the whole big investment ecosystem, and I realized that there is a subset of actors there named investment funds, which I've always been treating like those small aquarium fish that drift towards the bottom and pick up the small bits of food that are falling from where the big fish has fed. This is how I always interpreted funds from the height of multi-billion investments and so on and so forth, which is
Yeah.
probably correct. But it's still just like you said, it's an exciting part of business. It's a very necessary part of the ecosystem. I mean, this is all these companies were used to be small at some point, right? You just
Yeah.
never seen them that way, and I get to see that, and I get to be a part of that. I get to kind of I don't know steer it a little bit or somehow influence it and be there with the founder. It's fantastic to see, and one of the most exciting experience I think is one of my portfolio companies where I was literally the first physical investor. I mean, they never had anything yet. They didn't have a bank account. They didn't have a corporate. I mean, it was just literally like a bag of cash for the founder.
Yeah.
Uh, and it all started, and now a few years past. It's a dividend company, paying company. It's got hundreds of employees. It's got proper boards of directors with proper stuff discussed. It's got very serious. It's grown up. I don't sort of understand the 100% of the stuff that's being said there, which is a good sign for me. It's fantastic. It's interesting to see, and I'm very much looking forward to see where this sort of goes in the future. You don't get that in private equity.
Yeah. Yeah, but it's also like finding a needle in a haystack, right? So it's a lot more harder. So what do you think you had to unlearn or learn, like when you moved from private equity to VC?
Well, yeah, it took quite a bit of adjusting when I went to venture from VC from the private equity, because you're exactly right. There's a lot of uncertainty. But I wouldn't say I've unlearned things. I've learned to give them less importance, maybe. They become less narrow focused, if you will. And I mean, in private equity, if I buy into a company and, half a year or a year down the line, it becomes a different entity, starts, I don't know, selling instead of buying, and, producing instead of, I don't know, coding or something like that. This is normal in startup world. This is just called a pivot. And, this is normal if they discuss it with you. So I had some unexpected emails from some personnel in some portfolio companies announcing a pivot without me knowing, without the founders knowing. That was exciting. Apparently, it was just a figure of speech. But anyway, yeah, this is what was perfectly normal for a startup was totally unacceptable in private equity. It just it's a different risk profile, and but once you realize that, it's like changing the coordinates. I would say. I mean, you still move the same, it's just coded differently. So I wouldn't say it's a completely sort of new me in new industry. You just adjust, and it's not something that changes from top to bottom.
Yeah. And could you talk more about your fund? You focus on AI as a technology, and you're a global with a global mandate and early stage. So when you say early stage, is it seed stage or?
Yeah, yeah, yeah. I mean, we're a US-based international fund. We are geography agnostic. We invest pretty much all over the world. If you see, check our portfolio, about half of it is in the Silicon Valley, while the rest is all over the world, like Australia, France, the Baltics, all over the place. Yes, the portfolio might look a little like a zoo in terms as far as the sectors are concerned, but they're all united by the fact they have AI at the core of them. So yeah, these are, I don't know, metals and mining, health tech, legal tech, sports tech, cyber tech. I mean, they all seem different, but they all use AI at their core.
So yeah, a couple of things. Why AI? And also, I've come across a couple of AI funds. They all have a
Uh-huh.
global mandate. I know. Why is that?
Well, why AI? That's a good question. Actually, it is a result of a bit of a mistake or a wrong forecast on my behalf. Because when we were starting, we thought we're a small fund. I'm not particularly fond of delegating everything to a huge team. So we need to go for something niche, compact, but with a very good growth and investment potential, which is why AI was selected. And my, what a huge miscalculation that was. But it turned out to be not a niche, but it's becoming more and more pervasive. I mean, it's a nice mistake to make when you significantly undervalue something that you are still going to invest in. So this is why I completely agree with the term coined by Andrew In that it is a new electricity. It is going to be everywhere. I mean, it is clear now. If it wasn't clear for some a few years ago, it is clear now. So yes, yeah, it is. I think it's mm, we got those large, well-established industries that made trillions of dollars to their first investors. Like say, take auto manufacturing, for example.
Yeah.
Imagine being able to give an investment to Henry Ford, but back in the 1920s. It's a different sort of graph altogether. This
Yeah.
is what I think AI enables those matured, saturated, large, boring industries. It enables them to experience the second wave of growth. And, why not ride this wave?
Yeah.
So
So
that's why AI. Why geography agnostic? I don't know. I mean, I just well, first of all, businesses are global in general, so it's strange to to concentrate in one geography and try to get the best there with while ignoring 90% of the planet you live in. And you never know. I mean, like those metal mining guys from Australia, they are fantastic. As the computer vision guys from France, as I don't know, half of my portfolio from the US. If I concentrated on one particular reason, I would have missed them. That's not right. I don't like. Plus, you get to travel a lot and see a lot of new fun places. Don't forget that.
Yeah. So you mentioned about AI disrupting a lot of traditional industries and helping them, go for that next spurt of growth,
Yeah.
helping them. So, like, why would a lot of industries adopt AI? What is a clear value proposition for them, in your opinion? Especially, let's take
Uh,
mining as an example.
I think it's going to become a do or die at some point because I mean you're welcome to not adapt and use a shovel where your competitor is going to use a tractor. We'll see how far each of you gets. So you you just won't be able to not use it. I mean, say yeah, you can take let's take the metals and mining guys from my portfolio. They are using AI, which this enables them to spot minerals under the earth, be more precise than traditional methods, which means they act faster, act cheaper, and do a lot less damage to the environment. I mean, what's there not to like?
Yeah.
And any big mining company knows very well that these are very sensitive issues. If you can, if you got them covered, you're fine. So the best bet would be to go with them, with AI, with our company, or with other companies. But I mean, you need to do something. You need to
Yeah.
adapt.
Yeah, so it's probably like mechanization and digitization in the past, right? Like
Yeah, yeah,
digitization.
something like that. It is a bit of an industrial revolution. Yeah, yet another wave for that.
Yeah.
Yeah.
So, like, what traditional sectors have the most potential for AI disruption? I mean, you mentioned everything, but yeah,
Well, I've tested quite a lot in the credit portfolio. So the second fund I'm currently planning is going to be a bit more focused, and it is going to be focused on the sectors that I am currently most excited about. I love as you probably noticed already, the hardcore, the boring industrial sectors. These are, as an investor, it's easier, well, for me to go there because they're less influenced by fashion and general trends and perceptions. These are more business oriented, so it's easier for me and for my portfolio companies to sell. Basically, that's one thing. Two, during my career at private equity, I did almost 300 or about 250 or something. I've counted them and forgot the number of deals in all sort of various areas of industry. So there's a lot I can help by bringing my experience and bringing my network. There's a lot to do there. So I suppose that's probably the best reasons for that.
yeah. So, I mean, these are industries like mining. What other industries?
Mining, heavy
Agri-
machinery, manufacturing, metals producing, and so on and so forth. I mean, there's lots of examples dating, I don't know, 10 years back when these kind of companies tried using AI and it paid off fantastically. Like there was this huge metals smelter plant in Russia, I think. They've partnered with an AI people to optimize their ferro additives, the stuff they use they put into iron to make steel. And AI optimized the amounts to put there so they could, I think they used something like, I don't know, 5% less of that, which resulted in billions changes in capitalizations and profits and everything. It's good. It's good to be there. Plus, what's another probably not so obvious point is that I'm currently targeting European markets more than the US. And the US is considered one of the largest, if not the largest markets. I mean, the
yeah.
Europe, when you go there with a B2C approach, it is fragmented. It's got loads and loads of countries talking different languages. But if you go from, look at it from a B2B, especially the heavy industry B2B perspective, it becomes a one huge homogeneous market, probably about the same size as the US, if not larger. So that's another reason for me to choosing, these particular industries.
Yeah.
And after all, yeah, you're right. We started as a niche AI fund. I think we were the first to actually specialize in AI. There's plenty of those now, but yeah, it is now time to focus. AI is everywhere now. Need to focus again.
Yeah.
Chances are, with the third fund, I'll be focusing yet more. We'll talk in a few years and see if that's the case or not.
Yeah. Yeah. So you mentioned that it's easy for founders and yourself to show the value proposition to these
Yeah,
industry and to sell. So
yeah.
if that's the case, why aren't many people forward building companies in this space? Or are they? Like I'm not really sure.
Well, I mean, there are people building companies in this space, but it is easy. for me, well, I wouldn't say easy, but it's understandable how to do this, right? How to approach a large corporation, how to talk to them. It's not just that easily done. I just know how to use them, and I'm happy to teach the founders that, as well as some obvious to me, but not so sort of obvious to most things, like a sales cycle that can take, I don't know, 2, 3, 5 years. This is
Yeah.
not something the founder is readily understanding. I mean, they use half a year as an example of a very long, boring sales cycle, and they're going to burn out in a year and a half.
Yeah.
This is not something that people are readily realizing. Plus, large problem with this kind of startups is that they are created by people from this very domain of knowledge. Yes, they have knowledge of the industry, be it, I don't know, vehicles or steel or, I don't know, utilities, electricity, you name it. But they are not businessmen. They are engineers, probably corporate managers who spent half of their career thinking that if you give them the freedom to do anything, they know how to drive growth, and they'll show them all. They come over, they build the company, they're unable to do anything. So that's it's not that easy, as easy a space as I may make it sound.
Yeah, especially if the sales cycles are so long, like 2 years. So how do you survive then as a startup?
Well, you need more money. So basically, yeah, you survive as a startup. You talk to people. You probably realize that there are people who know a bit more than you in some particular areas, and you just listen to them. As I've had these conversations with my portfolio companies in the current portfolio, that you're saying that don't plan a blitzkrieg. Things are going to take a long time. There's going to be mistakes made. These are large corporations. Even if you negotiate well and get into their budget, their budget is fixed in 1 year, and after you get into that budget, it's going to be realized the next one. So you are going to have to sit there and wait. You need more money. You need a psychologist or someone like me who's going to be sitting there and telling them it's all going to work out in the end. Everything is well. Don't get demotivated. Don't get don't go and start another startup. Your company is doing fine. Yeah.
Yeah. Yeah. So you're a solo GP. So
Yeah.
how do you spend your time on any particular day?
Well, at the moment, it depends on the stage of the fund is currently in. I mean, my current fund is fully invested, including the follow-on, so it's more like I'm no longer searching for new companies. I mean,
Yeah.
obviously, I am updating myself on reading the news and so on and so forth. But it's less search; it's more helping the existing portfolio to grow. So I mean, I'm always in touch with my founders. I'm always in touch with, I don't know, with the industry, with the world. And I'm always, as a background, you're always thinking whether there's anything you can do for one of your portfolio companies. I mean, without even sort of realizing that. You talk to a guy on the street about something and snap, there's an opportunity. You discuss that. So I wake up, check my timetable. We're all sort of servants of the calendars. So check my timetable, check the messengers, see if there's any fires that needs taken care of. Hopefully not. Then read the news and just leave. I mean, I don't separate work from life, vacation, non-vacation. It's just something I live. So I'm always. Plus, a good sort of advantage of having a geographically diversified portfolio is anytime, if you wake up in the middle of the night and you have nothing to do and you don't feel like it, there's always someone there you can talk to in your portfolio.
Yeah.
There's always a daytime somewhere, whether it be America, France, or Australia. So you just talk to founders, ask them how things are, and chances are something is wrong. Chances are you may help. So you just get on with it. Communication, basically. That's the thing you do all day.
So when the fund is actively investing, then how do you spend your time differently, or when you're raising for your fund?
Well, this is how. Well, this is what I'm going to be doing now. Like I said, I mean, the fund is fully invested, so I'm helping my current portfolio. Plus, I've got some free time that instead of looking for portfolio companies, looking for GP, so for LPs, for investors into your fund.
Yeah.
So yeah, again, it's going to be lots and lots of communication, maybe cold calls, maybe a bit more. I mean, like I said, I've just started, so maybe more participating in industry events, conferences, and things like that. Although I don't know, I mean, I've always been kind of what you name mobile first. So when the 2020 came, everybody starts getting, started crying that there's no more business conferences, there's no more personal, tete-a-tete meetings, and the business is going down. It's not going to work. No, nothing changed for me. I mean, half, but I'd say about 20% of my portfolio I've not met in person yet. I've got to know them, invested in them, the due diligence, invested, and managed the company via Zoom, calls. So
Yeah.
I think this is going to help, and there's quite a bit of online activity going on. So chances are I won't be moving that much, but yeah, communication. It's all about communication. Just communicate with different stratas of people,
Yeah.
depending on the task.
And also, what would be like the best testimonial that you could ever get from one of your portfolio companies?
Well, as part of I don't know, self due diligence or 360 evaluation, you name it. I mean, I always try to collect feedback from founders. Plus, as about half of my portfolio comes from Y Combinator. They've got this internal network or something
Yeah.
named
Book face.
it's Bookface. Yeah, that's the
Books.
one where they leave sort of references onto any investors that they've dealt with. So I've got some experience, some opinions from that, and the one that got me most excited was something like along the lines of no bullshit, very quick decisions. I think this is something of a good venture capitalist description. Because I mean, in our industry, it is vital to make quick decisions, both from the portfolio company's perspective. From yours, I remember, when I invested in a company with a certain valuation, and then 7 hours down the line, it was worth 1.5 times more, and just kept going. So you need to act quick, and the founders value this as well. I mean, I'd be happy to hear, from a founder that Mikhail is fantastic specialist in this narrow topic. He's doing great, but every founder and every day has different topics that needs helping with, and I would prefer to be able to help them in all of those.
Yeah. Yeah. And what's something that other people may overvalue in venture that you don't?
Hmm. Overvalue. Well, lots of people overvalue this as being rocket science. It's not. It's rather it's a combination of good, not fantastic, but good enough knowledge of a multitude of disciplines. So some people overvalue the value of financial education, which I have, which is probably why I don't quite understand that. Some people under. I mean, I've always undervalued psychology until I sort of faced it and realized that wow, this is something that's equally as necessary, if not more than that. But I don't know. Some people tend to overvalue not the industry, but VCs themselves, as in I don't know, sacralizing them. They're afraid to just come up to me and talk, write me an email, cold email. That is, I'm always happy to answer. That's something I've noticed about the industry. I know we're not people sitting in ivory towers and all acting inapproachable. That's bad for the business, after all, right? People overvalue the inapproachability of investors. I would say something like that.
Yeah. I mean, a lot of VC says that when they look back at the data, that kind of makes sense because all the good deals apparently that they get are through some introductions, and it's
Mm.
and cold emails are a sign of like a laziness from a founder.
I would not say that. I mean, there are plenty of opinions, and I'm not the one to support this. I mean, I'd say this is probably, this might be part of the legend, if you will, or a mode to get less people coming into the industry to protect our industry. But
Yeah.
no, I'd say this is not a myth. It's always nice to have a warm intro to be able to get some more references. But I mean, cold emails and cold messages via LinkedIn do work with me. That's for sure. And I do read every single one of my emails. Might not be instantly, and chances are I might not say no, because I mean, saying no takes time, and I don't like to say no. You have to provide the reasoning behind your no. So I don't always reply to founders' emails, but I always read them all. And if anyone is listening, thinking of writing me, yeah, please use. Do you mind me giving
Yeah,
my
yeah,
email?
yeah.
MT at Taver, that's Tango Alpha Victory Eco Romeo dot capital. CAPITAL. Just drop me a line and I guarantee I'll see your email. No guarantees of investment or reply though.
Yeah, and also the first thing that you mentioned that people tend to overvalue is,
Bit
education. And
difficult to approach us, yeah.
I mean, also you mentioned about the knowledge in finance. Why do you think that is not so important?
It is important, but as it's not so difficult, and it's not that important at the early stages of the company. There's no finance there, so
Yeah,
the knowledge of finance is it's good to know how to build a financial model. It's good to know how to persuade the founder to create one, even at the early stage, because I mean it helps a lot with with you understanding the founder, with the founder understanding the business, and as a general sort of just to understand what's happening. I mean, this is probably just the prism I'm looking through this because I have a finance career. But yeah, I've always said that building the financial models from the very start of the business is very necessary. But other than that, all those sophisticated formulas, instruments, these all belong to a different stage or to a different market. You don't need that. It's nice
yeah,
to have because just as regular mathematics, it kind of develops and trains the mind.
yeah,
But as a professional skill, you need some finance, you need some accounting, you need some psychology, you need some, I don't know, geography, you need some general knowledge of how the world operates, and so on and so forth. There's lots of, I wouldn't say shallow, but not too in-depth bits of knowledge to be a good VC.
yeah. And one last question: why name the fund after your name?
Oh well, initially, it was named Gagarin Capital. It was after the
Yuri Gagarin.
yeah, Yuri Gagarin, the first person in space. Like I said, at the time, we were the first fund to actually explore the AI. At least the first one who declared that completely. Then after that, I decided to change the name to Taver Capital because, like those 100, 200, 500-year old restaurants in continental Europe, in Italy, France, where the only name is the name of the owner, and going there, that the owner is there. It's his name on the sign and on the door. He's going to be responsible for what he does. It is him you're going to be blaming if something goes wrong. I don't know if you get a food bug or something. So it's a sign of it's me trying to show that the fund is me. I am responsible for that, and my name is there on the door. So you're dealing with me. I'm not hiding behind a brand. I don't know. It might be a strange logic, but I like it. Not because of the vanity, that's for sure. I'm a lot less excited about having my name on the fund, but I think it's good. It's good for the
Yeah,
business.
yeah. This was fun. Thank you so much for taking the time to do this.
Thank you very much, Rahul. Thank you very much. I hope I answered all your questions.